If you don't know exactly what's on your chart when you're trading, you're simply gambling. What's up, everybody? Chris Dover here, head systems trader at Pollinate Trading, also the founder. Today, I want to talk about, again, and I'm going to go deeper on this. I'm going to continue to go deep in this entire series about market regimes. What we're going to go over today is indicators and how that helps us categorize the market regime. So what we want to understand about market regimes are they are built to categorize the market, give us characteristics, understand what we're doing. I gave the example earlier. It's like a calendar. If you're in North America and it's July, you know what tools you're going to need to go outside. You know you're not going to need snowboard, the jacket, the gloves, and everything like that because it's likely going to be pretty warm. Same thing in the middle of winter. You're not going to need board shorts, flip-flops, and a tank top, right? What a market regime does is it gives you a general understanding of what's going on. It's not going to be the exact precise thing. And this is the key. And this is where most traders fall victim because all they're focused on is what is happening right this very second. They're not able to take a step back and see the bigger picture. That's what a market regime does, is it gives you that information. Think of it as like I said, if it's July, it's not going to tell you that it's going to be 92 degrees tomorrow. You're just going to know that generally speaking, in North America, in a lot of places, it's probably going to be between 80, 90, or 100 degrees. So you're not going to want to dress too warm. That's what a lagging indicator, such as a tool like a market regime indicator, will give you. It lags because it wants to give you that big, broad picture. And it's your job to understand what this big, broad picture is and then say, cool, I need to go get the tools for that. So in a previous episode, we covered the neutral market regime. The reason I did the neutral market regime is because we are currently in a neutral market regime in the currencies, in equities, and a lot of different spaces. And a neutral market regime means we're going to expect ups and downs, ups and downs, ups and downs. Let me show you what I mean here. I'm going to go ahead and pull up on the previous video, I covered the euro. This was yesterday. And if you recall, if you were paying attention, if you were following along with what we covered yesterday, we have our SQN indicator and we have this path. We had the blast off up. This is what I mean by lagging indicator. We were in a bull quiet here and it didn't represent itself until we were already consolidating. And then we're in a bull volatile up here and it didn't represent itself until we were consolidating. Now we're actually consolidating and we're banging around sideways. That is a neutral market regime. So this is what price action, this is the benefit of knowing price action as opposed to just looking at indicators. If you follow the strategies that we cover here at Pollinate, one of our main strategy, our most robust long-term trading strategy is the failed vol breakout, because markets tend to be in a sideways neutral market regime a lot of the times, and we can make a lot of money. Whereas if you're looking at a chart, most people are only going to see these big rips. They're not going to pay attention to what is happening in the sideways market. Whereas in a sideways market, you can get multiple different trades. 80% of the time, a market is attempting to break out and fails. So what we have are failed breakouts all along the way. And failed breakouts are one of the highest performing strategies out there. And why are they high performing? Because all you're doing is getting in on a reversal at the bottom of the range and getting out early. You're not looking to catch all of the move. So you can take a strategy that's 60, 70, 80% win rate here, and you can have really great returns because of it. So what I'm going to talk about today is I'm going to talk about the bull quiet market regime. The bull quiet market regime is something I've covered a lot. And the reason I'm going to cover the bull quiet here is because this is the most profitable market regime in existence. Okay. The way you literally just need to buy. You need to buy for any reason. And one of the key requirements of the key features of a bull quiet is that The best looking setups in the world fail over and 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 over. So these are trades we got into after the COVID decline. And then the whole world just kept thinking that we were continuously bearish. But price action, if you're just to take a look at that, if you're just to take a look at all this, look how many up candles there are. There's so many bullish candles. And the reason that it's a quiet market regime is because the candle bodies are so small. And you have these big bearish candles that just slowly get consumed. Big bearish setups slowly get consumed. Big sell signals gets consumed, and over and over and over. Okay. When the thing about knowing when to get out of a bull quiet is a completely different story. And I'll touch on that later in another section when we get into the bull volatile market regime. But the bull quiet market regime, it is again, when we use SQN, it's a lagging indicator. And the reason I like a lagging indicator is because it just tells me generally what to see. If I'm seeing best sell setups in the world failing, now, because I've done so much research on the bull quiet, bear quiet, neutral, volatile, all the different market regimes, and I've been able to categorize them, I can now understand I can figure the leading indicator out to say that we are in a bull quiet market regime. So while we look at the SQN here, you see that the SQN didn't fully go into bull quiet until July. It's just that we had already purchased, let's see, before we got there, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 or 16 entries added to our position before it even flipped into bull quiet. And you'll notice that it got a little bit more volatile around there as it did flip into bull quiet. This is a lagging indicator. So when I go back and I do thousands of back tests on these different setups, I start to develop an intuition. You start to develop an idea of what it is. This is why SQN, the fell vol breakout, any of these other rules-based strategies are not as good until you've actually done the back testing. If you haven't done the manual back testing to test this stuff out, then you're constantly looking for these shortcut rules to help get you there. Having a tool like the SQN helps keep you from doing bad decisions because you just don't understand what's going on. When you have SQN, it at least keeps you in the game. But if you've done the manual backtesting, if you go back and you do the work, well, then you don't need a lagging indicator to tell you what's happening. You can have price, which is the forward indicator. In order to get good at price action, you need to practice a lot. There's no way around it. If you have not done thousands of manual back tests, bar by bar, going through inch by inch, and I'm not talking using code, I'm talking manual back testing, going through bar by bar, thousands of times, you're going to need another tool. You're going to need indicators to help you out. You're going to need things that are going to help keep you from making bad decisions. And it's the same thing. I'm not saying that it's anything special that I can do price action. There's no wizardry whatsoever in doing price action in trading. What the hard part about it is the manual back testing, and people are not willing to do that. So when I talk to traders who are always bringing up the SQN is a lagging indicator and it doesn't give you guidance on where it's going, and that's true. But then I say, so explain to me your reasoning on why this is going to play out this way. And they really just grab a bunch of indicators and start grabbing at straws with gaps here and it's above the 50. And we've got the Powell doing this and the elections and all these other things. They don't have true understanding of what it is. So they can sit there and argue all they want about something like an SQN. They can sit there and argue all they want about lagging indicators not helping. But if they haven't done the work, I know that they're just gambling. Now, that's not to say that using a tool like the SQN is gambling. The reason we have the SQN is to help people avoid getting themselves into situations that they don't understand the outcomes. They don't understand what the expected outcomes would be. simply because they don't understand what the price action underlying is doing. They're trying to read the headlines and figure everything else out. Now, let's take it to present day. We find ourselves in a bull quiet on the NASDAQ, according to the SQN, but according to price action, this is pretty much the equivalent of a, I'd rather have it sideways like that. The precision of it, believe it or not, is what hinders most people. They get caught up in the precision of where to place the line instead of understanding the general big picture here. And what we have on the NASDAQ is we have this range that seems to be holding. Okay, it comes down to the bottom of the range, rips up. We have some really big up moves. Remember how we had smaller up moves and bigger down moves? This time we have bigger up moves and smaller down moves. Until last week we had a big one. And to be fair, it's an election day today, so things are a little bit crazier. But what I want to point out is that we have a very clear channel forming, and we're wearing out some really big moves. I mean, the NASDAQ goes from 6,600 to 12, so doubles in about 6 months. 6 months, the NASDAQ has doubled. What would be reasonable to expect out of that? Another doubling or a bunch of sideways action that just really pisses everybody off? Well, I'm not here to say, which one is expected. Sideways action makes a lot of sense. Taking off to the top to piss everybody off makes a lot of sense. Selling off to the bottom makes a lot of sense. All three of those outcomes, everybody would be angry at, and that's fine. If we have a tool like the SQN kind of giving us guidance, right now it looks the distance from the highs, the 270s down to we got down to, it looks like 71. That was a pretty quick move down, and we would expect some buying to happen down at this 11,000 area, which we're seeing. We would expect if it continues, understand today is one of the most volatile days, probably most people who haven't been trading for a while will have ever experienced. And I'm not talking about just the trading day itself. It's later in the day, in the evening, overnight is when things get a little bit wacky on an election day, but it still serves. So as we find ourselves in a bull quiet, we're going to look for more reasons to be long. We find ourselves at the bottom of the range. If we were to take out our FVBO, we had a almost set up there, and a lot of traders will have taken it and will be looking to get out in this 11.4 area for a 1.5 R move. If we're a price action trader, well, we had some pretty good sell setups that started to follow through, and then bulls started to buy back, and they're starting to defend fairly heavily so far today, at least. We'll see how the remainder plays out, but that's some pretty good bearish moves. These are some great bearish moves. Remember, we did get out and we hedged and we got ready right here. So we basically exited the top. Some of our traders shorted the top, and they did quite well. I hedged, and mostly because I had such a big position from down here. Later on this week, we're going to be going over bull volatile, bear quiet, bear volatile, so that we have a better understanding. And then I'm going to wrap it all up, organize it all really well. We're going to create a playlist specifically for the neutral, bull quiet, bull volatile, bear quiet, bear volatile. So each individual market regime, you'll have the understanding of the characteristics, and we can start drilling down in each individual one where we are, so we can have a clearer understanding of how we're doing all of those things together. Everybody, it's been a pleasure. Hit me up with your questions and comments, like and subscribe, share this out to the people. I love doing these sort of things. I'm glad I'm back, and I'm glad I got this little studio space to do it. Hit me up with questions, and that's it. I love you.